trying to get in touch with companies which would speak about what's happened to the on-ground situation with regards to what the numbers that came out in the IIP, what's happened with the agrarian economy. Escorts, the natural suspect, to talk about that. And let's get in Mr. Rohtash Mal, the ED and CEO of the company, to speak about that and more. Mr. Mal, thanks so much for joining in. Give us a sense, Mr. Mal. I mean, you look at the kind of data that is coming in the IIP, particularly for the cap goods space for the last 4 months, has been dismal. I don't believe the volumes have been too great as well as far as tractors go. How is the situation looking really bad, or will it shape up better ahead of the monsoon months?
This is, firstly, yes, the statistics that have come out are dismal. But then statistics often hide far more than they reveal. And in the space that we are talking about, i.e. Tractors and farming, on the contrary, we are seeing growth rates which are in the region of 25%. The tractor industry is growing between 22 to 25% for all of the last, I would say, 17, 18 months. And even if you take the last 4 or 5 months, the clip is bang on. And speaking for Escorts, we are growing at the same pace. So while the whole index of industrial production has taken a dip, if you go sectorally inside and if you analyze it in detail, there are signs of positivism and sunshine there too, such as tractors.
Right, just to talk a little bit about the rise in input costs this time around, are you beginning to feel the significant pricing pressure, or do you believe that there is decent demand in order to absorb the kind of rise we've seen of late?
This has been a trend in the last 6 to 7 months. Cost increases have happened over the last 6 to 7 months. These have been, in a sense, passed on to the market, in a sense, made up by internal efficiencies. And we just, for example, announced a price increase from the 1st of March by about 4%. And these have, including internal efficiencies, taken care of the cost increase. As far as the cost push is concerned, I still see an incline, although there are some signs of steel prices softening just a bit. This equation may change with the unfortunate and dramatic developments in Japan, but for the last few months, cost pressures that have been seen have been managed by the industry, both on account of internal efficiencies and price increases to a buoyant market.
Just expand on that point a bit, Mr. Mal. How would the situation change because of what's happened in Japan?
Look, you're going to have a lot of turbulence in many industries. Steel, for example, there is likely to be some turbulence there. We're not quite sure what has been affected yet and what not. After all, the whole thing is close on to 2 to 3 days old. We're still getting reports of how demand-supply patterns are going to change, and it will show up over time. But and in any case, the tractor industry in India is not dependent on imported steel, but it does change the steel demand-supply balance. So this will play out. On its own, if it had not been for Japan, I would have seen prices slightly softening in terms of steel and going up for rubber and other materials. So I would expect inflation pressures to continue in the next 3 to 4 to 6 months until some kind of a decline is seen around Q3 or so. So to go back to your original question, yes, there have been cost increases. We have managed to pull through that with the price increases as well as enhancing internal efficiencies, which at Escorts is a constant movement.
Mr. Mal, the last time that we did interact, you indicated that you were operating at close to 70% capacity utilization. What are the levels that you're currently operating at?
Well, the big smile on my face says that last month we operated close on to 80%, and in the month which has just started, it should be around the same number. So our, let me say, the average run rate, or the running average if you like, for the last few months has been inclining beyond 70%. We are now looking at 75, 76, 77% going forward.
All right, we wish you all the best for that, Mr. Mal. And We'll of course talk to you again once your board meet is over in a few days from now. But thanks so much for taking this time out and speaking with us.
Gladly. Thank you.
That's Rohtash Mal of Scott speaking about how the situation on ground is. The capacity utilization has improved quite a bit from what they had mentioned the last time, and situation probably looks up ahead of the monsoon months. 131 is where that one is trading. But let's take a bit of a detour, go to commodities as well, because that's where a significant amount of movement is happening for the last 2 or